The KL High Court has dismissed Serba Dinamik's formal application to suspend the court's order for the oil and gas company to make public the fact-finding updates done by Special Auditor Ernst & Young Consulting. Judicial Commissioner Wan Muhammad Amin Wan Yahya made the decision following a hearing today. To recap, last Monday the judge had directed Serba Dinamik to release EY Consulting's findings on the company's financial accounts for the 12-month period ended December 31st, 2020. In the written judgment, Wan Muhammad Amin concluded that the information sought to be announced in the fact-finding update is material and does not depend whether it is true, false or conclusive. He noted that Serba Dinamik is entitled to disagree with the information to be disclosed. He also stressed that Bursa Malaysia is entitled, under Section 11 of Capital Market and Services Act 2007, to give the directive to Serba Dinamik in order to uphold and maintain a fair and orderly securities market, to safeguard public and investors' interests, as well as take the appropriate action for the purpose of monitoring and ensuring compliance of the market's listing requirements. Soon after the court order was made, Serba Dinamik formally wrote in to apply for a stay of Wan Muhammad Amin's decision. The Inland Revenue Board, or IRB, is set to provide tax relief for COVID-19 detection test and vaccination expenses for self, spouses and children in its 2021 tax relief assessment. According to its website, the IRB said an individual can be eligible for a tax exemption of up to 1,000 ringgit. In December last year, Deputy Finance Minister Wan Datuk Muhammad Shahar Abdullah highlighted the introduction of a tax exemption of up to 1,000 ringgit for individuals who take COVID-19 screening tests in provisions under the Finance Bill 2021. He said during the tabling of the bill in the Dewan Rakyat previously that the exemption is contained in the amendments to the Income Tax Act 1967 and effective for the 2022 and 2023 years of assessment. Glove maker Supermax Corp has aborted a plan to buy 2 pieces of freehold land in Setia Alam, Selangor from SP Setia subsidiary Bandar Setia Alam. The plan was to acquire the plots measuring about 1.99 hectares or approximately 4.962 acres for 73.49 million ringgit cash to build an operations headquarters for its wholly owned subsidiary Maxter Glove Manufacturing. However, Supermax had to shelve the idea after it failed to obtain approval from the Economic Planning Unit to waive a 30% Bumiputra equity ownership condition prior to transferring ownership of the land. The deal with Bandar Setia Alam is now terminated. Supermax said it has received the total deposit refund, including stamp duty, on January 27th, and that the caveat on the land was withdrawn effective January 31st. The group said the development does not have a material effect on its earnings per share, net assets per share and gearing for the financial year ending June 30th, 2022. At the close, its shares were 3.36% lower at 1 ringgit 15 cent for a market capitalization of 3.13 billion ringgit. The International Monetary Fund, or IMF, says Malaysia's economy is set for a gradual recovery, with real GDP growth at 3.1% in 2021 before accelerating to about 5.75% this year, thanks to the authorities' impressive COVID-19 vaccine rollout and swift implementation of economic policy support measures. In its 2022 Article 4 mission with Malaysia and statement, it said the recovery nevertheless would remain uneven, with sizable economic slack and substantial medium-term pandemic-related risks. The IMF team recommended additional near-term targeted fiscal support towards vulnerable and hard-hit segments of the economy and productive investments. IMF economist Lamin Lay said, Coordinated and targeted structural reform policies would help address long-standing structural challenges, including the need to strengthen social safety nets, limit economic scarring, and enhance economic resilience. This near-term support should be combined with a medium-term fiscal consolidation plan, underpinned by budgetary reforms to rebuild buffers and safeguard sustainability. The agency also believes the accommodative monetary policy stance is appropriate and said financial sector support measures should continue to be more targeted and unwound as the recovery becomes entrenched. Malaysian Rubber Glove Manufacturers Association or MAGMA President Dr. Supermaniam Shanmugam says demand for gloves in 2022 and 2023 is expected to be 10 to 15% higher than the pre-COVID-19 level. This is due to the global spread of the Omicron variant. Supermaniam said there will be a slight increase in demand for gloves, especially from Europe and America, though it will not be comparable to the surge seen in 2020 and 2021. Average selling prices or ASPs, meanwhile, will stabilize. In a note last week, Jeff Apex Securities Research said the ASPs will continue to taper at least until the second half of 2022 as the rubber glove industry undergoes a paradigm shift due to oversupply conditions stemming from Chinese glove makers. The research house said Chinese manufacturers have received rising orders from overseas markets, while rising raw material prices also exacerbate the circumstances.